when I decided to start the Sugar Show podcast, I wanted to make sure that I covered all areas of our career as sugaring professionals, not just sugaring technique or products that you should probably get, but also business professionals, marketing professionals, savvy personal development folks. And I sure did find that in our next guest. It is very, very critical that you all listen in on this episode, because if you do not have a strong financial foundation, and if you are not mindful of the way that you run your business every single day when it comes to taxes and finances and all the stuff that seems yucky, I promise you that if you take the words of wisdom from our next guest, you will feel strong and empowered and really ready to take on whatever comes your way and make the most of this career. So I am thrilled to introduce you to our next guest, Kenesha Coleman of Coleman Tax, also known as the Beauty CPA. Are you interested in learning more about body sugaring? Or are you a sugar professional who already knows how to sugar, but you are looking for better ways to kick up your business? Welcome to the Sugar Show podcast. I'm your host, Shannon the Sugar Mama. Hello, beauty world. This is Shannon, your sugar mama, and today we are going to be meeting our new beauty CPA, Kenesha Coleman.
Hi, Shannon. Thank you so much for having me. I am excited to talk to the sugar professionals. I'm going to be dropping some gems and helping them out in their business.
I love it. Dropping the gems. We're going to drop some gems. She's also going to be dropping some gems in the Love to Sugar community, because we have invited her to be a special monthly guest. And she is going to be monthly giving us tips and tricks on how to make sure that our books and our financial world is all tight and dialed so we can go kill it in the years to come. So thank you, Mama.
No problem. I am here to help, and I am just committed to this profession. And hey, I am here to use, as much as you want.
I like it. Well, we're going to use you, girl. Are you ready?
I am.
First of all, this is the Sugar World's first time meeting you, I believe. So can you just give them a little understanding of who the Beauty CPA is?
For sure. So my full name, I'm Kenesha Coleman. As Shannon said earlier, I own a boutique tax firm. It's called Coleman Tax, and we exclusively serve beauty entrepreneurs. My goal is to put you all in a position where you are paying the least amount of taxes legally possible. I have a wide variety of experiences. I started my career at the IRS as an auditor. So I saw a lot there. I learned a lot there. I left because I was done fighting. So after that, I went to public accounting, and then I spent time in corporate tax department. So I have like all three factors of tax. I've seen it, I've done it, and I see how the big guys play. And I want to bring that to, the small business beauty professional. So you guys could take advantage of this system just as much as they are.
Oh, I love that, because we need somebody that's in our corner for sure. Because, oh man, the whole tax thing, especially after 2020, this year has been a doozy.
Yeah, no, it has, right? So you got what? PPP, EIDL, which I'm sure, no beauty professional or other small business entrepreneur are thinking about the tax effects of that, but there are. And then you have a bunch of other COVID related things, like our president, he just created a payroll tax holiday. That's going to affect everything too. So, when this year closes and 2021 comes, we just got to be ready for all of that. And so now that we got 4 to 5 months left in the year. Now it's time to be keeping aware of, okay, when we get back to normal, we got to be ready for when it hits the fan.
Mm-hmm. Yeah, we got to be ready with our fighting gloves on so we can make sure that we don't lose any money. So I have to tell you, audience, when Kenesha and I first started about topics, she says, well, I think we should talk about tax planning. And in my mind, I'm like, okay, first of all, has it ever been in the history of our country that taxes were not April 15th, but they were July 15th? Is that the first time ever?
It has to, yes,
Yeah,
I
that's
believe
never
so.
happened.
In my lifetime, it has
No.
never happened.
Yes.
So,
In your few years, you young buck. But it's true. Like, I mean, even that, just starting there, like we just finished our taxes and now you want to talk about tax planning? Because when we first talked about topics, because, there are 1,000 different topics we could bring up when it comes to financial planning and beauty business.
mhm.
So when we wanted to narrow it down and you said tax planning, I thought, oh yeah, but isn't that for January where you gather up all your receipts and get all your stuff together and you hand it to your CPA? And you said, oh no, tax planning starts now. It starts yesterday.
Absolutely.
Mm-hmm.
Absolutely. So every year, right? I'll give you a little snippet. Every year, I get new clients that come to me and say, "Hey, what other deductions can you get for me?" And I say zero because the year is over, right? So by the time I prepare your tax return, I'm preparing it for the year before.
Mm-hmm.
So any tax benefit that you want to have, that needs to have been implemented and planned for during the tax year that it relates to. So by the time that tax year is over, 12/31 of whatever year it is, it's donezo. I mean, there are very few things you can do, but the stuff that really, save you a ton of money has to be done before the year is over. So, people always talk about, get ready for tax season. This is what I say to that. We need to get rid of the word season altogether. Taxes, think about taxes in your business all the time. If you got money coming in, a portion that belongs to the tax man for state and federal. And so because of that reason, you got money flowing all year. You got to think about tax all year. So
Well, let's talk about the fact that these sugar professionals, they were flowing money, flowing money, flowing money because they have this new skill now and we got to make sure they know what to do with it.
mhm.
Right? So let's give them the top, say, three. I know you probably have lots of ideas, but let's give them the top three so that it's easy to digest and they can have a little homework from this podcast. So, what would you say the top three things are that we should be doing now?
Yes, absolutely. So I got three, and I'll go through each one of them and explain. So I'll
Okay.
tell you what they are first. Number one, bookkeeping. And I just want to clear the air. Bookkeeping does not mean in your bank account, in your merchant account, looking at the PayPal transactions list. That's not bookkeeping. Okay. The number two thing is, setting aside money for taxes. Almost, I don't know, over 50% of the newer clients that I have, they're not used to set aside money and paying quarterly estimated taxes. So then when the tax bill comes, they got to pay it all at once or set up a payment plan. And then number three is deductions. You guys are not taking all the deductions you're entitled to. And then maybe because you're not bookkeeping. So it's all kind of, intertwined. But you got to use that, use those deductions to your advantage and take every penny that belongs to you. The first thing, bookkeeping. I said before, bookkeeping does not mean looking at your bank statement or your PayPal account or whatever you're using as a merchant, like the merchant account provider. What I mean by bookkeeping is using a cloud accounting software such as QuickBooks to, on a monthly basis, review your cash inflows and outflows, categorize them, and produce financial reports to see how you're doing, on a monthly basis. You have to. You cannot manage what you don't track. You can't just look at the bank statement and say, oh, I have, I don't know, $5,000. You may not because you got expenses that's about to hit the bank account and flow through. That brings me to another kind of sub point for bookkeeping. Make sure you have a business bank account. This is separate from your personal bank account. You don't want to commingle the funds. I can tell you as my experience from being a revenue agent with the IRS, if you were ever audited and that auditor saw you were commingling funds, they're not going to trust anything you give them. Because how do you know your stuff is mixed in or with your personal stuff?
Yep.
So that audit is going to be much harder for you.
Just makes it so much cleaner, doesn't it, too,
It
to
does.
do all your.
It does.
Yeah. On that note, I was thinking about those people that say, you know, oh, I want to be a 6-figure esthetician. Well, remember, a lot of those 6-figure, I'm using my air quotes for those of you on the podcast, 6-figure estheticians, they might be bringing in 6 figures, but their expenses and their payout could be almost 6 figures, and they're not making that much money. So strong books is so important.
Right. The books are the foundation to everything. For example, how do you know what to charge your clients? You know, how do you know what you can afford to buy as far as the products you're using on your clients, or maybe the retail that you're selling? How do you know if that's even a profitable retail line to be carrying? And first, everything will start and end with the numbers, everything. Yep. And you won't have good numbers unless you're doing the bookkeeping. So that is like my number one. You guys are beauty professionals. You are a business. It's time to really, operate as well. I don't care how small the revenue is. Some people think that like, oh, I'm not bringing in a ton of money a month, so I don't need to do bookkeeping. Nope, that's not true. If you're only bringing in $100, you account for every penny of that $100.
Yeah, for sure.
Yep. So then to my second tip, setting aside money for taxes, right? So, let's say you charge $100 for a service, for a sugaring service, you get $100. Does that $100, is that all profit? Does it all go to your personal bank account? Absolutely not. Absolutely not. You know that you have bills to pay. On top of that, you have taxes to pay on the federal level and the state level. So my recommendation is to set aside 25 to 30% of your revenue. Set it aside just for taxes. Out of sight, out of mind. The way I normally recommend my clients to do this, or any beauty professional, is if you set it up to withdraw and transfer automatically from your business bank account to, and you can have an endless amount of business bank accounts. You can have a checking or multiple checkings because they serve different purposes. You can have a separate business checking account just for taxes. So when the quarter closes or the year closes and the tax bill comes, you already got this stack of cash over here you've been saving. And you don't have to go get on, an installment plan and have the IRS like sending you letters demanding money. No one wants that. No one opens those letters anyway. But no one wants that. So out of sight, out of mind. Just remember that if you make $100 from sugaring, that $100 is your revenue, but it is not your profit. You got to pay the tax man.
And he's coming. You can't hide from him.
Makes it so much easier at the end of the year. And, some people think, I don't make a ton of money. I don't have to do quarterlies because the tax law says, and I apologize for quoting the tax law because I don't like to do that, but it does say that if you are self-employed and you make over $400, you have to be paying the quarterlies. Now, you can choose, some people still choose not to. You are going to notice a penalty tacked on to your tax bill at the end of the year. So I bet you guys, if you're interested, if you know you haven't been paying them, take a look at your last tax return and see if you see a little bitty penalty there because you haven't been paying them quarterly.
So for someone who is, just making kind of a small amount of money, if they're like, oh, I'll just pay my taxes once a year, the government actually wants you to pay them quarterly and you will get a penalty if you don't pay them quarterly.
They want you to pay them quarterly. I mean, just think about it. If you ever had a W-2 job, they take it out of the W-2 check as often as you get paid. Weekly, bi-weekly, twice a month. They're taking it out. Self-employed people do not get an exception.
That's a great point, Kenesha, because I hear a lot of people say, oh, well, I don't want to be an employee. They take all the taxes out of my paycheck. And it's like, okay, but even if you're a solo, you are the one that has to keep track. And it's actually easier to be an employee because they just take them out for you. You
Yeah,
just turn in your W-2 and the end of the year, you get your return or whatever it is,
absolutely.
Yeah, but
Absolutely.
you have to see
Absolutely.
yourself as your own employee and take
Mhm.
your own taxes out.
Yep. Yep. You're still paying them either way. Either you're doing it quarterly, which should be refreshing, than to get to the end of the year and have I just had to tell a client that they had a $9,000 tax bill because they wasn't paying quarterly. And so now they have a one-time payment of $9,000 to make. Now I would take 9,000 spread over the year any day than 9,000 all at once.
I love, I actually have the plan where I auto withdraw out of my brick and mortar store. I auto withdraw out of that account and put it aside for taxes. And I have to tell you, even though I know I do that, it's actually out of sight, out of mind. It just automatically every Friday just dumps a certain amount of money, it just transfers it over. And the very first few times I did that, when the tax bill would come, I'd get butterflies opening, like, how much do I owe? How much do I owe? And say it was like $800, right?
Mm-hmm.
I would open like, oh, shoot, I owe $800. And then I'm like, oh, wait, I saved for it for the last few months. And I'd look in and I'd saved $1,000. So I'd happily write my little check, like, I got this covered. Oh my gosh, it changed my heart. It changed. I felt empowered.
Mm-hmm.
I felt by making this small change that I didn't kind of notice, and don't go dipping into that fund, right? Don't go dipping into that account because the tax man is coming, like you said, and to be able to just go ahead and write that check out of that account, no problem. I slept at night. I wasn't worried about whether it didn't sucker punch me.
Yeah.
And I think that's what's key about following these instructions, you all, is if you have a bookkeeping system, number one, and you're setting aside money, number two, you can sleep at night, even when things get crazy like this. So great advice, Kenesha. Thank you.
Yes.
And let's talk about number three.
Yes. So maximizing tax deductions. Now, I don't know why this baffles me, but beauty entrepreneurs, sugaring professionals, you're not taking all the deductions you're entitled to. You're not. Almost maybe most of my returns, I can find extra deductions just by simply asking the beauty professional some questions about, their day in and day out. And they'll say things like, let me think. I had to take an Uber to see a client or something. Or I drove between salons for something. Okay, are you taking the mileage for that? Well, no. Why not? And the common reason is, I didn't think it really amounts to much. Doesn't matter. Doesn't matter. Take every penny that you're entitled to, because those little bitty expenses that you're saying, I don't think it matters, because you do it maybe a small amount every day, but you're doing it for 365 days of the year. So it could really, really add up to, large amounts that can really keep money in your pocket. So I want to say this. Everyone asks me, okay, can you deduct this? Can you deduct that? I want you to flip that. Flip the way you're thinking about that. Because most of the money you spend on your business, you can take. It may be more so a matter of, what can't you take? And there are very few things you can't take. Like literally, I can list maybe less than 5, less than the number of fingers on my hand, right? Like for example, if you were ever audited and got a penalty, you can't deduct the penalty. Or you can't deduct the federal taxes you pay, right? But you can't deduct anything illegal. That's, you can't deduct anything illegal.
Right.
But If you spent money on something related to your business, yes, it's tax deductible, of course. So I say deduct it all. There is no penalty for making a mistake and deducting something you shouldn't have. There's no penalty for that. But most things, 99% of things are tax deductible, and you're not taking them because one, you think they're too small. Two, back to point number one, you're not doing bookkeeping. Mm-hmm. You don't know that you can deduct certain things because you are not accounting for the money you're spending. You're not keeping track of that. So you don't even remember that you're even doing it the following year when you prepare your tax return. So that's why, it's important to keep up with your books so that when tax time comes, you have an accurate record of all the money you spent, and you can benefit from taking a tax deduction or a credit for it.
I have a question for you. Back in the day, we'd had shoe boxes of receipts, of little white receipts, and which is kind of funny because a lot of the ink is that like self-evaporating ink. So you end up with this super faded little receipt. Yeah. In this day and age, in 2020, what is acceptable for receipts to gather, So like what kind of proof do you need to have when you're making these deductions?
So what I would say is, to be conservative, you get a receipt for something, I would say try to electronically store it. So like what I do even in my own business, if I go to Office Max or something and I get a paper receipt, take a picture of it, I send it up to a folder in a cloud called receipts, and there it is. Now, if you were to lose a receipt for something that costs $5, you're still good. Normally, the IRS does not require you to keep a receipt for expenses under $75.
Okay.
But if you can do it, just because the more the better with the IRS, right? Nowadays, the receipts are coming electronically. So create a folder in your cloud, and call receipts, save them there. Create a folder on your phone, save them there if you rather, or you can just email them right to yourself. Now, the great thing about these cloud accounting softwares like QuickBooks, you can take a picture of your receipt with their app. It'll go right to your books within QuickBooks. It will create the entry for you. So
I didn't know that.
Yeah. Yes, and let's say you don't get a paper receipt that you take a picture of. Let's say you get it through your email because you bought them online. You can forward that email to your QuickBooks email as a receipt. It will keep it for you, still create the entry in QuickBooks, and all you have to do is verify at the end of the month when you review your books.
I did not know that. So gone are the days of the shoebox filled where you dump it on the accountant's desk and you say, here you go.
Gone are those days, and good ridden. If those days were still around, I wouldn't be an accountant. I'm not doing all that paper. Let me take this back. It doesn't look like receipts in the shoebox anymore. This is what will happen. This is what's happened to me. I will get emails full of bank statements. And will I take them to prepare a return? Of course I will. But I'm going to charge you for it. Yes. Because, think about it. That's bookkeeping. And bookkeeping, that's a separate service than tax return preparation. So now I have to do your books and then prepare your tax return. That's another reason why you want to keep your own books, because it's going to save you money when you do get your taxes prepared, because the tax person don't have to do it.
And now we have time to be looking at our QuickBooks and taking some of these tutorials and getting better at our QuickBooks so that we can keep up on our own business and be an empowered business owner. One of the things that I love about, I do my own books. And one of the things I love, even with my corporation now, I do my own books because I want to see what's going out and what's coming in. And I actually will catch little things like subscriptions that I should have gotten rid of from, some meal planner thing that I bought to cook meals for my kids from a year ago, and the trial ended and it's been charging me this whole time. You can catch things like that. You can catch maybe if you were overcharged for something, but if you don't do your own books, that's just like throwing money out the window. You didn't even realize somebody was just reaching in and grabbing the money right out of your account. You're like, how come I don't have any money? Well, because you're not on top of your books.
Yeah, correct. You gotta,
oh my gosh.
Gotta know. This doing your own books, it goes beyond tax, right? It's just as a business owner, you gotta know what those numbers are. You gotta know where your number is. If somebody wants to, let's say somebody wants to come in and invest in you, in your spa or salon or your studio, somebody wants to just outright buy you or something, that's one of the first things they're going to ask for is books or numbers.
And if you already are empowered and you have that, no problem. All right, piece of cake. Boop, boop, boop. You push, hit a report. Here's my profit and loss statement, sir, ma'am, whoever it is. How
about PPP and EIDL? That was one of the things they asked for. Tax return, books and records. They want to see financial statements. You had to have that to apply to every loan or grant for COVID relief. You had to have financial statements. Yep. Financial statements is just a summary of your books.
Yep. Okay, so let's go back over the 3 steps. This is homework for you all. If you're walking the dog right now or you're hanging out listening to this podcast, here are your 3 steps. We're going to put them in the show notes as well. Number 1,
bookkeeping.
Number 2,
set aside money for taxes.
And number 3,
take every single penny of the deductions and credits you qualify for.
Okay, so we're probably going to need a little help with that. So what is a resource that you have that will help us get on the right track with deductions?
Oh, absolutely. So I have a guide. It is called Can I Deduct This? And it is the Beauty Entrepreneur's Guide to Tax Deductions. It's going to take you from A to Z on knowing what you can deduct in your business. It's going to give you a 27-point cheat sheet of business expense tax deductible categories. And I have a blurb in there about bookkeeping. So everything I just said about bookkeeping, it's in that guide as well.
Okay. And it's free for us, right?
Absolutely.
I love it. So we're going to put the link to the Can I Deduct This resource for you all in the show notes. And I highly recommend that you download this information and get your books right. Get some strong books, Sugar Babes. Yes. And Miss Kenesha Coleman, the Beauty CPA, she is going to help us on this journey. And she is joining us in the Love to Sugar community. And she is going to be monthly giving us tips and tricks. We have a new contributor.
Absolutely. Absolutely. And I can't wait, right? So I have so many resources for you guys just to make this financial management journey easier, especially since you're doing such good for everybody else. I mean, because I'm just going to be completely honest with you. I have unwanted hair. And so we need you, right? It was right. And because of that, I'm going to be there so you can get these numbers right and make it easier for you so you can focus on your business.
I love it. I love it. We're going to go into 2021 with strength and wisdom, and we're just going to do that together. So thank you, Kenesha, for being on the show today and for being in our community and being a part of our world.
Oh, absolutely. Thank you for having me. And I cannot wait to see you all every month.
All right. I love it. And Sugar Babes, you got this. Let's hear your experiences inside the community. Jump on over there. And we're going to be talking about this in our coaching sessions in the Sugar Tribe, because I want to make sure that you can handle what's happening in 2020 and that in 2021, it's going to be a whole new leaf that we've turned over. So cheers to your sweet success.
Absolutely.
Thanks for listening to today's podcast. For more information, visit us at www.love2sugar.com or our Facebook page, Love to Sugar, where our community has come together to help you be a better sugaring professional. Cheers to your sweet success.